welcome to Momentum Monday. Howard, how was your weekend?
It was good. We're back to work. Kind of excited. A little sunburned. San Diego has been beautiful. A little hot, eh, Ivan?
It's been really hot, yeah, definitely. I mean, I read that the whole world is experiencing an incredible heat wave.
Are you going right to the global warming, like before we even get started?
Yes, we should go there, yeah.
There's no global warming. Trump says there's not global warming. I agree with everything Trump says. You've got to get on board the Trump train, Ivan. The market could care less what Trump says. So let's get right to the momentum. I think let's go right to the chart so people don't have to look at us. And welcome back, everybody, to, I don't know, it's a record for us, probably 8 to 10 weeks in a row that we've been doing these, I think.
Yeah.
And so you're seeing charts, as always, today from MarketSmith, our sponsor, letting us use their charts and data and supporting our show. We will always keep it kind of low produced and homey because that's how small investors do it. We don't need to overproduce this stuff. So, Ivan, are we seeing the charts and not our ugly faces?
Yes, we're
okay.
Seeing the chart.
So everybody, this is the index that matters. We'll get to the other index that matters, which is small caps and micro caps. But this is the index that matters. It's the NASDAQ, as Ivan has said. If you follow Ivan, index investing is great, but you might as well find the best indexes. And the NASDAQ 100 is the best index, crushing the S&P over the last 8 to 10 years. And that's what we like to do. We like to help people crush the markets. We think the S&P is nice. And if you are lazy and want to keep costs down, dollar cost averaging the S&P is a great strategy because it is a classic momentum strategy and trend following strategy. And a very active, well, not very active, but an active strategy. But, our goal is to trounce the market. So we continue to focus on the NASDAQ 100 because that is trouncing the S&P. Is it not, Ivan?
Yeah, for the past 10 years or so, that has been the case.
Yes, and this will continue to be the case. If the S&P continues to outperform world indexes, I would think the NASDAQ will continue to outperform the S&P. Because the tech weighting in the S&P continues to grow. So this is just momentum that we're talking about. That's like one of the most simple ideas around momentum. And if you look at the monthly chart, which Ivan has up, you get nervous. You go, shit, am I buying too high? The second thing that we like to talk about Momentum Monday is who knows? Things that stay in motion, things that are in motion tend to stay in motion. And so we like to drill down and see why. And so that is a S&P monthly, is it not?
Yep.
Give us the NASDAQ monthly, the NASDAQ 100 monthly. Oh my goodness, yes. And so NASDAQ is, go back to the daily here, Ivan, and we can see we had bounced right where we needed to bounce. I was getting nervous a couple of weeks ago, and that is, as a 52-year-old man, Canadian, I get nervous when stocks start hitting support, and normal people do. Because it's money on the line. Now, we've bounced where we should in a healthy market. The S&P and NASDAQ relative strength continue to rise. And within these indexes where we will start digging next, you will see stocks that are continue to perform incredibly well. And so what the worries, Ivan, that keep coming up is Trump this, Trump that, trade war. The market has digested this trade war pretty damn well. It is a definite happening. We are definitely in a trade. We are definitely in a trade war, and you can see that now that we are definitely in a trade war, China finally bounced. The S&P has kind of been choppy, and the NASDAQ has been a little bit choppy, but the Chinese markets have been in fear of this trade war. And on news that the trade war really did start on Friday, markets decided to finally bounce on that news. And because they bounced, the S&P really was strong today. So Chinese stocks bounced from Baidu being the big one there. What did Baba do today?
Not much, flat, yeah.
Some of the little momentum ones like IQ that I've been following, looking for an entry level here, bounced today. But you can see, as trade wars heated up, the froth came out of these stocks. And now we'll start to see what really the effects are. These are digital companies, so I don't think the trade war is a reason for the sell-off on its own. We can see in the U.S. market, Ivan, Netflix, Facebook, Amazon, all-time highs today. Netflix, let's see, all-time highs.
Yeah, for the big tech names, Netflix, Facebook, Google, it's normal to see something called a pre-earnings rally, because everyone wants to be ahead of the rest of the crowd. So in the past few quarters, people have been front-running the earnings, and we're seeing rallies in those big names that have proven themselves that they are able to beat earnings estimates.
Yeah. And this is Netflix. Okay, I saw this stat yesterday. Again, could be fake news, but I don't think it is. Netflix alone counts for 1/5 of the world's downstream bandwidth usage. Listen. Some people will look at that and say glass half empty, meaning Netflix, that's only going to get, that's bad for Netflix because the cost. Obviously, to me, in my glass half full world, that means attention-wise, people are spending 20, almost 30% of their internet time on Netflix. The world, and this goes to 2 points of today. Netflix is overvalued. I definitely sold too early. It's part of my 8 to 80 portfolio, though, for people that just has been long for the last few years consistently. And we look at Twitter, TWTR, and Facebook. Those are my 3 interesting to talk about the digital. This is North America. We can see Twitter had a little bit of a sell-off, and you can just see the dips. People want to own the dips in Twitter, and we'll talk about Twitter a little bit. And if we go look at Facebook, now they're all-time high. Okay, so let's look at these 3 stocks: Facebook, Twitter, Netflix. This summarizes the U.S. attention market. And pre-teen, we can go to Snap. Let's take a look at Snap quickly, Ivan, because I want to dive into this, because the trade wars are important, but you're not going to hear about that on this Momentum show. So you can see Snap, which really owns like my son's attention, but we've seen this throughout history with pre-teen and teen products, from Club Penguin on down. If you really just own this pre-teen market, the market will never give you the valuation that you think you deserve, because that market, is just hard to retain as they go to college and onward. If Snap proves that they can keep this generation through college, you will see a different trajectory as they, if they can keep that market as Snapchat kids move from college to the working world, this stock will be tremendously undervalued. But the jury's out on that. You cannot be a teen product. Next, so let's go back to Facebook, Netflix, and Amazon. Probably Netflix pull up. Thanks, Ivan.
Yeah. So
look at Netflix. People are spending 20% of their time, internet time, on Netflix. I am part of that crowd. And what's driving people nuts, from HBO to AT&T doing the roll up to YouTube, etc., is the content on Netflix. I gotta say, leaves a lot to be, especially the new content. 1 out of 10 or 1 out of 20 things are interesting of their new stuff. So if you're really just interested in new content, it's easy to get nervous because you can churn through content endlessly on Netflix. Ivan, you were going to chime in with something?
Yeah, I was going to show that concept about the pre-earnings momentum drift.
Okay.
You can see it perfectly on Netflix charts, how in the past few quarters, about a couple weeks before the next Netflix report, Netflix is rallying. Look at this. Just before the earnings report, I mean, the rally varies. Sometimes it's only 2-3%. Sometimes it's a lot bigger.
But it's also been gapping up after earnings, which is really...
in some cases, but then that gap usually, has led to a pullback in most cases. But
so the machines are playing the pre-earning. I get it. I'm thinking more longer term here. And again, I'm not recommending Netflix tomorrow. I'm just saying, in the scope of trade wars and digital, the United States is 3 products. There is Twitter, and again, I'm taking Snapchat of it because it's a teen and pre-college and somewhat college market, and they haven't jumped to the next generation. So there's Netflix, there's Facebook, and there's Twitter. And with Facebook, I think it's Instagram. But if we look at Twitter, the weakest of the three, but to me, the most interesting of the three, and that's why we've been, continuing to recommend it, is that, and not chase stocks, is Twitter is the internet. If we look at the internet in the United States today, it's three companies. And then it's a bastion of other companies fighting it out in e-commerce. So it's these three companies which you theoretically just have to own if you fundamentally want to own the U.S. internet. And a lot of conservative players keep making this play through Verizon. They keep making this play through Comcast. They keep making this play through Disney, and we like Disney. And they keep making this play through AT&T and Verizon. Really wrong ways to play it. And the institutions are telling you they want to acquire these three stocks. It's Netflix, Twitter, and Facebook. Twitter, the weakest, because their business model is the weakest, right? And because it's such an easy product to voice your opinion that there's so much spam. And today the news on Twitter was, they're deleting like 10 to 15% of their accounts, active accounts, because of spam. Big deal. This has been known that Twitter should be doing this for years. So of course the initial news, if you look at the daily, Ivan, was to sell this off this morning. You could see the fear. It was so I could hear the fear in the stream. It's just, Twitter's the greatest. For the last 2 weeks, you got to own Twitter. Why are you selling Twitter, Howard? This Twitter's the greatest. Put it away. And then first thing this morning, people were panicked. Then the fact that Jack decided to finally announce that they're going to kick off 70 million spam bots. Okay. Yeah. I think Twitter is going to gain. So again, like originally the stock was down 10% this morning. I think it's important because, it's the first time that Twitter has actually dealt with this in years, and the market did what it does. It flinched. The stock's not cheap. It'll never be cheap. They have a terrible, I don't think the right business model. They're not going to grow. The product is the product. Other than making an outside acquisition, which they haven't proven to have done a great job with over the years, they are going to be perennially overvalued on earnings. But this is the internet. People spend their time on Instagram, Facebook, and Netflix and Twitter. And so the other part of the internet that's doing well despite trade wars is the commerce stock, Square. Let's look at Square. Continues to execute in all kinds of markets. PayPal is the next one. There's just no sellouts. They just keep getting taken. Visa, which I'm been bullish on forever. Yep, continues to hold in there. MasterCard. Yep, and Shopify. No matter what the government does around taxes, these stocks sell off when news comes out about something that should slow them down, but won't. Because the American consumer is addicted to the internet, okay? We'll keep blaming it for all the world's problems. It really isn't the cause of the world's problem. It amplifies all our problems, but it is not the cause of all our problems. So the ways to own the internet in the United States are through commerce platforms, Amazon being number one. That's why the stock, I think today again, Ivan, all-time highs. Close, okay? Despite all the rhetoric, Trump hates the Washington Post. Oh my God, they're not paying their fair share of taxes. Could there be a president that hates a company more than Amazon? What has Amazon done in the face of the most powerful, I say that in quotation marks, person in the world has been able to do to this stock? Zilch. That is, I'm not saying go out and buy Amazon tomorrow. I'm just telling you what the market is saying about the internet, okay? And it is powerful. So that's, under that backdrop, it is hard to be negative. And I think that's why, Ivan and I have been conservative of the last few weeks as the trade wars heat off, and we've probably been wrong. It's been a very strong rotational market. So as these stocks sold off today, what happened to banks? As much money has been scared out of the market. Today we just saw rotation, right? Ivan, the banks.
Yeah, I mean, and also we also typically see that rise in banks just before they report earnings. So we see the same pre-earnings momentum drifts in bank. in bank stocks as well. But a big...
I'm not as excited about them. I'm glad they bounced. They were due for a bounce. People were getting nervous. That's what bull markets do. They scare everybody out, and then they bounce just after you get scared out. The strongest bank continues to be Silicon Valley Bank. It's acting like a tech stock, and for good reasons. It really is a tech stock because they own warrants and thousands of future NASDAQ companies. So it hasn't traded like a bank stock in years. It kind of filled a little bbit of a gap, and resumed, rallied where it needed to start rallying today. So you see that even with banking, as Silicon Valley Bank, which is kind of an internet bank, continues to be the strongest bank. Bank of the Internet, also no branches, BOFI, San Diego Bank. This is a bank with no branches. Makes sense. Doesn't have the real estate aggravation, just straight lending bank on the internet, right? Look at how that bank stock has done relative to other bank stocks. Great, just marking time, digesting higher interest rates. But just, if you want to own a bank stock, you got to look at Silicon Valley Bank and Bank of the Internet on dips. Those are the strongest banks. 91 relative strength here. Look at the earnings on Bank of the Internet, $3 for 2012. So I think, if banks catch a bid here, those are the two banks to look at. Elsewhere, Ivan, let's go to some new ideas. So in the sense of the market has digested this trade war news and has digested the fact that the popular vote went to Hillary and has digested the fact that Trump is colluded with Russia. I mean, I don't even know what news could come out. It's going to be news that we don't know. I mean, the market has digested the fact that the Trump's colluded, because the only thing that Mueller can say is that he didn't collude, and I don't know what the markets would do then. Like, the only thing I don't know is if Mueller came out and said Trump is innocent, with the markets, I think the markets might just drop because they've priced in the fact that he is guilty. And, they have priced in the fact that Hillary won the popular vote, and we have priced in now a trade war, or the beginnings of a trade war, and we have priced in the fact that, Trump is our president for 3 more years. So there's just a lot of negativity that's being priced in. And what I don't see, Ivan, is a lot of bullish people. So that's something that JC mentioned to me, is that you can find, if we look at Tesla, you can find a battle going on where people think it's going to go to zero. This is the battleground stock of maybe the decade. Is while you're fighting about what Elon Musk is doing, you're going to miss great opportunities. Like, half the internet is fighting over this company right now. And if you look at this, what is it, 3-4 years now in the 200 to 300 range? I just don't know what the battle is. You're wasting your time. You're missing great things while people, day trade 10% moves in Tesla. You're missing some of the great stuff going on. So you see, as Tesla does this, you're getting missed. While you focus on, is Tesla going to go bankrupt or not, and what kind of person Elon Musk is, there's a lot of great stuff happening. Ivan, give us some new ideas, stuff that's working.
I think if the Chinese internet stocks continue to bounce, AMZN, which is the Shopify of China, and Baidu are two that can definitely currently offer good risk to rewards to own them.
Small cap Chinese stocks. BayZhen looks good. Where's Baidu? Baidu looks, like a digested CEO gain.
It's in the range, but if you want to front run and cheat a little bit, I mean, you can own it here.
I just don't love it here. I liked it higher, but I don't like it here anymore. Look at IQ. That one interests me.
That's really positive, Howard, that you don't like it. Okay.
Yeah.
And a few recent IPOs that they're looking interesting. I mean, this one had a humongous short squeeze in June.
Holy smokes! Dropbox is back into its base. Yeah.
Yes, it went up 50% in a week, and now it's all the way back to its IPO base. And you can see here some buyers stepping up around 31. I think this is interesting. If it can just clear 32, maybe we might see another leg higher in a good market, of course.
What else? I don't like that one, but keep going.
2 other recent IPOs that they're looking interesting. Pivotal Software, is trying to clear its downtrend. Again, these are all good, I think, for short-term swings. Like, these are not long-term.
Let's go to social leverage 50 then, Ivan. Let's look at some names. One that I looked at, Ivan, TVPT. It's popped up on a few of my smart people that Victor PTT, Tom Victor. It's a back-end travel API product for all the websites. TVPT.
Okay.
British company. This looked interesting to me. I'm trying to do some work on it. It's a UK provider. It's a back end, behind the scenes connector for travel sites, right? And you know how I love the travel industry. This is the most interesting idea that I just haven't done enough work on. But from a purely technical perspective, you have to, you buy a few shares to track it, which I do in Robinhood. And then you start doing your work to see if there's something big here, like a double or a triple. But it has all the makings of a big idea. Long base, if we go back to the monthly. Look at that weekly base, Ivan. It's incredible.
Yeah, definitely. A base which is a few years long and which is
British. It's small market cap. Look at the earnings. Look at the projected earnings at $1.57. So it's 15 times earnings. If this
they're not really expected to grow fast. I mean, if you look at the earnings in the past few years.
I understand, but the point is, I like the trend of it. Like 4 years of profitability, they figured something out.
Mm-hmm.
So the institutions, what I see here, the relative strength rising relative to the S&P. No one's heard of this stock. You hadn't heard of it. Look at the short interest. And, as millennials get into, how I feel about travel. My travel stocks are not doing well. MMYT not doing well. We'll get to that in a minute. But TVPT is interesting. So I say, if you wanted to speculate, here is a stock that no one's following that looks interesting. And I'm doing some work. But I do own a few shares.
Mm-hmm. Yeah, I mean, for a long-term idea, definitely looks interesting. After that breakout from that huge base, for a swing trade, it's extended.
It's extended. But I'm talking about this is a Howard idea. Okay, let's go to social leverage 50 before we wrap up. See what else is showing up on our list. So for people who can't get enough of us, Market Wisdom is Ivan's daily mentoring product. This is where we get our ideas from. It's how much a month, Ivan?
It's $99.
Yeah, $99 a month. Best deal on the internet. You get Ivan in your corner. You've got this software. This is where this is our little secret sauce of where we pull ideas from. It's kind of relative strength meets social strength meets fundamental strength. So what's showing up here? Let's see, software continues to be the same kind of stuff.
Many familiar names. Yeah.
This is unbelievable. Square and Twitter, which are Jack Dorsey companies, are number 1 and 2. They've been on the list. They've performed tremendously since they showed up on our list, up 34% and 19%. Is that correct, Ivan?
Yeah, since the last time they showed up. Yeah.
Look at our if you circle our performance, the performance column. Look. If you can enter these stocks when we enter them, like when it shows up number 1 on the list, when it enters the list and you buy these stocks in a good market, look at the returns over short periods of time that these stocks have. And we haven't even talked about Coupa. Showed up on the list, I don't know, 22 weeks ago, quietly sitting there. Ivan and I have not talked about it. Shame on us. Up 74% since it showed up on our buy list. 22 weeks straight. So through all the noise, Netflix also 21 weeks straight on the list, up 68%. Continues to be the 4th best looking name on our list. What's Zayo Group? Communication equipment. So there's some interesting different names. We've talked about a lot of these. Stitch Fix showed up. That was a new idea that I like.
Yeah.
But you can just see a lot of the same names, right? Green Dot's an interesting company. That's a banking and credit back-end service. Pull up GDOT. We talked about it a few weeks ago. Fifth week on the list, Ivan. It's banking in a box for all these startups. And, digesting, multiple breakouts over the last year and a half. But this is a really interesting back end. As fintech grows, Green Dot's supplying a lot of the technology and ammunition to these startups as they want to become banks and offer services. And you can see beautiful breakout as fintech was kind of gaining in popularity in 2014, 2015. I never even heard of the company until like 3-4 weeks ago. So that's the beauty of the stock market. That could be the beginning of a great run. Is there a longer term, a monthly Green Dot? Whoa! So really, it's just breaking out. So it went public at 60, or it hit 60 in 2011. Wow! I do some more work on that. That is an interesting company. So as well as it's done 7 years ago, the people thought the company was worth about the same as it is today. So is it a $4 billion company, Ivan?
Let me see. I'm not sure. Yeah, $4 billion company.
Okay. So look at the earnings per share. So that's one. If you like fintech, that's a back end one. It's going to be hard for people to understand what it does, but go to their website and you can really see that they are. If you are a fintech debit kind of banking product, you're using the Green Dot APIs. It kind of goes to what we liked about MuleSoft and Mongo. It's just quietly in the background benefiting from the growth in fintech. And then any other ideas, Ivan, that you have?
Yeah, a few other names. iSurgical, it's breaking out again. I think
the robots.
It's good for
AVAV, iRobot, Emzor. Where's that AVAV also all-time highs?
Yeah,
Keep it simple.
also all-time highs. Let's take a look at iRobot.
Actually, iRobot's doing is basing again. I gave up on the stock a while ago.
Absolutely, building a new base.
It used to be the favorite name, and now it's the laggard. And then Emzor is the other robotic stock. So robots continue. It's another surgical.
Yeah, definitely, it's building a new base.
Building a new base. Definitely big shorts. This is not a loved. This is a fire. This is a. I avoided this one because it's just so confrontational, which can be great, but I just hate the heavy confrontational stocks. I like my trends to be ignored, not battled over. I find my best returns in like a TVPT where no one even knows about it.
Yeah.
Versus everybody fighting about is it a fraud, etc. But this Emzor is a really interesting Israeli company that I owned early and got scared out of, and it's now basic.
Yeah, definitely. If it clears 62, I think this one can.
Yeah, the earnings aren't great. It's kind of been choppy, but if it can truly. But iSurgical was like this. This is one of those that is used in surgical guidance in orthopedics and spine, and very interesting Israeli company that I used to read up about. But iSurg continued. Da Vinci seems to be, it's the Google, the Facebook of robots for surgery. I mean, look at that. It's a stock that I just, unfortunately have never have owned because I just don't, I'm never going to see the product in use. But it's performing surgeries every day around the world. The Da Vinci product, and to those that owned it, fantastic. There's no reason to sell it. Incredible. Okay, Ivan, have a great week. I think we gave out a lot of good ideas. I think people really need to hone in on the leaders that we talked about and continue to watch from an attention standpoint. It's Netflix, Facebook, and Twitter. They dominate the internet. That is where people spend their time. And then everything else is about commerce on the internet. So have a great week, Ivan, and we'll talk soon.
Yep.